All right. Good morning, everybody. Today's one of those odd days, a little weird, where the market's going to close early, and then we're going to be closed tomorrow, and then we'll be back on Friday, finish the week. This can really mess with the options trades. So, if you're trading in the front end and you're using that short duration stuff, just approach with caution. The spot gamma site is a little behind today. Their morning material isn't updated yet at all. So just have to wait them out. We still have the founder's note from last night. And one of the things that stood out is that the call wall that was rolled up has now been rolled back. And we can take that in a bearish context. I don't always circle back to point out and say, look what I did, or I was right. Even a broken clock is right twice a day. But yesterday, the upside target, 55.60 by the end of the day, was the goal. It was the call out. It was the trade that I took. And we got right to it just beautifully. I actually overshot it in the MOC at the end of the day when all the orders came in and flooded, popped us just a little bit higher. But as you can see, after that run, that's all. Well, we've kind of topped out here. And it's important to think about what next, especially for the rest of the week. We're going to get some pretty big data between now and Friday, but I still argue that Friday is the biggest one of all. All right, it's the non-farm payrolls. Even the FOMC data that we're going to get today, sure, I mean, it matters. I wouldn't say that, I would never say that data doesn't matter. But I think a lot of that information has already been priced in. And there will be some information that wasn't known when we get the FOMC minutes today. One, it is just the minutes. I often see people get this confused with the FOMC event itself. It's just the minutes from the meeting. We're going to get some information that we didn't have on people's bias in the meeting, who voted what, how they were standing off, and what their projections were. So we could see a shift in outlook between when's that first cut coming. So one of the things that you can do between now and Friday is the FedWatch tool. Just Google FedWatch or CME FedWatch. You'll find this page. It's free. It doesn't cost you anything. And you can go in and see what's moving in here. It'll show you a 1 day change, a 1 week change, and a 1 month change. We already know July is pretty solid. We're not going to really see anything shift here. It's the September and the November ones where we want to look to see if they're unwinding anything or pricing anything in. Right now, there's a rate cut priced into September. It's got a little bit of an unwind between yesterday and today. They were walking that back a little bit and pricing in no cut. So what is happening here is this one is going up and this one is going down. We can see that in the numbers here. So when these minutes come out today, we want to see if anything shifts here. See if it's updated a little bit more, maybe over the weekend. and by next week, have a clearer picture about what's going on in September. If they're going to walk back September, are they going to increase the cut expectations for November? So take it one more out, look at the November 500, 525, see if it's moving up or down. Right now, at least according to what happened yesterday, they were walking this cut back as well. So this also is going down and this is going up. If you're not sure how to read this, this is our current rate. You don't necessarily need both of those numbers. It just makes it confusing. So only look at one. Doesn't matter which one, just pick one. And then come down and this will tell you what we have or what they're projecting it to be. And again, just look at one number. So are we going to stay at 5.25? 23% chance. Are we going to fall to 5? 51% chance. But that chance is going down and this one is going up. They're unwinding this rate cut. How about for December? They are increasing the rate cut probabilities in September at this 500 level. This one. This is rising up. This one actually also went up. This one's going down, but just barely. It's just getting started. So looks like December. Now you can circle back on that by Monday. You don't need to stare at these things all day long trying to watch to see if they're moving. It's not worth the effort, right? Just stop in once or twice a day, see what's going on. It's something I like to do in the mornings, but you can do it in the afternoon. You know what I mean? Just take a look. After we get the data today, we could see a significant change in the unwind direction, or we could see December really start to get loaded up. The market is missing direction, guidance from the Fed. We're staying in this sideways situation, even though we keep getting more and more signals that things are beginning to deteriorate a little bit at a time, which is what the Fed goal was all along. So the Fed's happy. The NASDAQ, S&P, the Dow all flat. The Russell up a minor amount, really not even 0.25%. Europe at 0.5%. Hong Kong and Japan flat. I mean, everybody's on hold, wait and see, except Europe getting that reflexive bounce, right? And they've had a pretty rough time between the elections that are going on over there and all their parliamentary procedures. They're the only ones getting any real flow. Everybody else is on wait mode. So as you can see today, we do have a lot of data coming out. Initial jobless claims, it doesn't look like they're projecting a change. Just remember, there's a lot of revisions that come in on the unemployment side. We'll get a headline number and then behind the scenes, they'll do a revision. It's kind of shady, but you kind of get used to it, right? And then it's just same old, same old. But at least at the moment, nothing is projected to change on that side. ADP employment, on the other hand, we are looking at a change here. Some PMI data, factory orders, ISM services, all this morning. So 6:30, 8, 8:30, 9:45, 10, and then at 2 o'clock, the minutes. We'll be closed by then. So you won't even get to feel that. So as you can see, the biggest one out of all of these that we were looking at, ISM Services, really ranks the highest. But we got Christine Lagarde this morning out there chipping teeth too. And she just met up with Powell, right? Yesterday they had that a little talk. Gonna get some auctions today as well. They're all up in the front end of the 4 week. So you could look at something like the IRX. That's the 13-week chart. And of course, if you trade crude futures, you're going to get your crude oil inventories at 10:30. Yeah, it's really all that stands out. So a heavy data day can go a number of ways. On the one hand, we could keep getting conflicting data, keeps moving the goalposts, keeping us sideways because we don't have any dominant thesis. On the other hand, we could get one single data point that overrides everything else and nothing comes close to it in comparison. And that's the thing that dominates the cycle. It's really important to point out that this is one of the lowest traded volume weeks in the entire year. That sounds odd when you think about Thanksgiving and Christmas, but this trading week has the lowest volume typically throughout the entire year. This is the week. So lack of participants is where the markets can really move. And I know that might not make a lot of sense if you're new to trading, but lower volume means price can move a lot farther with a lot less effort. We'll just work through these levels one at a time. The levels that you see here is call wall volatility trigger 0 gamma. These have not changed. We're still waiting on spot gamma this morning to come out with their updated material. But if you read the founder's notes from last night, they did say that the call wall got rolled back down to this level. Well, actually to a little lower than that. Depends on if you're talking about the SPX or the ES. Let's see, the ES call wall 55.58. Okay, still in the same spot. The SPX call wall is the one that must have got rolled back down. Yeah, it's back down to 5,500. So we'll have to wait for the founder's note to come out to see about the volatility trigger, the 0 gamma. So we'll just get that out of the way. It's not helping. Today's ADR levels, since we're basically flat this morning, we haven't done anything. There's no edge like we had yesterday. Yesterday, when we were talking, we were already at one side of the ADR. And that makes it really easy to say if we get to one side really early in the morning, we have the opportunity to go to the other side. We had some edge there that we could use to project a forward bias on the day. Today, we're in the middle of nowhere. We don't have any edge to project higher or lower which side we're going to go. We're also hugging that VWAP, and we're still inside of yesterday's range. Now, we tried an inside day breakout and was immediately beat down again. So lots of flow here, like a sell wall, and we don't know if that liquidity is done yet. We have to assume that if we go back up into this zone, there's still a lot of sellers up there waiting. I would look for a day where either we just make very small moves and we stay inside of this range, the ADR red levels, or, which is more likely, that we stay between these levels, which would be a much narrower range. Yesterday's high and this lower ADR line. That takes this upper range off the table. Takes it completely out of the run-in. We'll know more when we get some information on the gamma index. See if we're supposed to range today or trend today. That'll help. Then we have the pivots. So the line in purple here is a floor pivot. The yellow lines around it are the pivot channel. It's just a math formula. The channel changes size based on the math. The size of the channel gives us some idea about whether or not it's supposed to be a trend day or a range day. If the channel is very narrow, what it's suggesting is if we break out, we could really expand like we did yesterday. Otherwise, a wide channel implies that we're very likely not going to break out and that there won't be much expansion. Now, that doesn't mean that we can't break out or that we can't expand, that we can't have a trend day. It's just what's more likely to happen. If it's a very narrow channel and we break out, it's very likely we're going to just keep on going. It'd be a great trend day, lots of running. The key there is if we break out. And as you can see, looking at that day where we had a very skinny channel, we hit the S1, we hit the R1, we never broke out. We barely got outside the previous day's range to the upside. There was so much selling up there, we couldn't get through it. We couldn't expand. Take this day, we had a pretty wide channel. We had some really big moves. We went to the R2 and tried to get above it. And even from there, made it all the way down to the S1. So it's not a perfect science. It's just giving you some insight on what the market should do today. This is a very wide channel. It implies, one, that we shouldn't even break out today, but two, if we do break out, that we probably don't expand very far, that it's going to be a kind of range day. I will add in a little bit of caution when it comes to bias. I know a lot of traders think that after a big move like this, that we're going to go sideways, that we're going to consolidate, or that we'll retrace at least some of it. And you're not wrong. There's history that shows that both of those things happen, but there's also history that shows continuation the next day, that we get another continuation of the move from yesterday. One of the reasons for that is if we still see shorts getting squeezed, right? If people are trying to short it and the CTAs aren't selling, the VC funds aren't selling and keep ripping higher, then everybody who keeps trying to short it just keeps up having to buy it back, and their buying adds to the buying. It just keeps going and going and going and going like a volatility loop. And we haven't reached the edge of the weekly expected move yet. So 55.92 is the edge for the week. We could see that. I don't think we're going to see it today, especially with the short holiday week and the short day today. But just wanted to put it out there that just because we had a big day yesterday doesn't mean we can't yet again, even in the same direction, have another big day today. Another thing about this pivot this morning is we haven't hit it yet. This is an MDP. It's a missed daily pivot. It won't count for today. We'll actually use it Thursday if we can go all day without hitting it today. We haven't hit it yet. That's a good start. We're also completely outside of the channel with price. And this channel today is completely outside of yesterday's channel. They're not overlapping like they were back here. You see how these two are touching. These two are not touching. So we have a channel completely outside the previous day's channel and price above that channel. That is considered bullish in first context, but the fact that we're not above the R1 and more likely, above the R2 does put this pivot in play for a magnet, that we're more likely to hit this purple line than we are hit this red line. How's that for some statistics for you bright and early in the morning? Now we are going to get some data this morning before the open. So if we can pop and rally up above the R2, then that's a gap we would probably keep into the end of the day. But that's a stretch, and that's not on the table as a base case argument. This is kind of sloppy, hard to see. What I turned on here is the weekly pivot. There we go. There we go. Now we can just see the weekly. This is the floor pivot for the week. And until yesterday, Monday and Tuesday, we were underneath that floor pivot. So we finally made it above. I've mentioned before, when we get too far away from a floor pivot, we often revert back, or will at least quit running. We've seen that so many times where the market gets this distance from its weekly floor pivot and stalls out there, and will try for 1 or 2 days to continue to go higher, and it just can't get any farther away from that pivot, and it turns around and comes back towards it. We're not there yet, but I would look for reciprocation distance. How far we went from the pivot this way is very likely how far we're going to go from the pivot this way. It's very odd how the markets work like that. We see it in RSIs. We've seen it in, a distance from VWAP. Happens all the time on intraday price. This phenomenon is no different than the sun, and the way that it is something that we can lean on with regularity. It just is, right? So I would keep track of that distance. If we max it out for the week to the upside, it's very likely going to be all that we get, no matter how much more we push against it. So after one of those days, I like to go over some of these tools to show you guys what it is that I'm looking for, to try to confirm that it's one of those days and that you don't want to short it. Think about the S&P, the NASDAQ yesterday, how it was just a ripper. How many of you kept trying to short this sucker? And don't get me wrong, there was candle signals and setups for a short, okay? And there was opportunities to go short. But the dominant thesis was still, we're going long, we're going long, we're going long. We're going to that 55.60. It's what I kept saying all day yesterday. I still like this target, 55.60. I liked it here yesterday and all through this trash and all the way up. Okay. I just kept posting it, kept saying it, 55.60. Some of the things that I look for, one is I look at this weighted AD. Now, this weighted AD yesterday was not helping out. Normally, what we would want to see is a very wide expansion, something like this, but to the upside, because it was a bullish day. We would want to see a deep expansion below 200 or 250. You can see, say, on a day like this, where it was stalled out around that 200, and then it finally started to expand. This thing can climb into 7, 8, 900. or minus 7, 8, 900. Big numbers. Yeah, there we go. One of these. If it looks like this early in the morning and it just keeps pushing and pushing and pushing, that's one of those days where we could have a trend day. On the cumulative tick, if the green line is leading, we have the opportunity for a trend day. It could lead up for a bullish trend. It could lead to the downside for a bearish trend. But that's one of the things that I'm looking at. The weighted AD is one of the things that I was looking at. Granted, yesterday's weighted AD wasn't very good, but it was still better than nothing, right? And this C tick yesterday wasn't as good as we would have wanted. It'd be better if all three lines were above the 0 line and we had this aggressive afternoon earlier in the day. That would have been better because we went sideways a lot. On the ticks themselves, staying in the green more than the red was really good, and getting a plus 750 to the upside. So getting above this green shaded area, that would be really good for a bullish signal continuation on the day, and or getting into the 1000 level at least once. We didn't get that, but we did have a lot of good green bullish flows. Then the NY Fang, just another piece of the contribution. Those are some of the things that I look at. There's always, of course, what the dollar is doing, what the 10-year is doing, what gold or oil is doing, US dollar, Japan, right? We still want to look around no matter what it is that you're trading. And then there's just the bias itself. The bias for the first part of the week is we're not supposed to break out. We're not supposed to go anywhere, especially to the downside. So it was a pretty safe bet to say that we weren't going to continue to break down below 5,500. We don't have that kind of edge today in between two ADR lines on low volume with a lot of economic data coming in. It won't take much to move this market. $10-day, 30-minute volume profile. We did finally lose the volume shelf that was down here. We have the classic D for the profile shape. This is slim. There's really nothing up here. So we are back above this pivot point. There's no help on the profile right now. There's nothing out of this 10-day that's going to give us any sort of insight. So yesterday we carried forward that point of control. Said I wanted to keep it, even though it wasn't a VPOC, I wanted to keep it for the day, just in case we happen to get up to that cog line, and maybe we would see a reaction out of the market, right? And of course, we made it up to the cog line. It's also where yesterday's point of control is. It's really close to that level. And we ran up and we took out this point of control, which I'm going to move it in a minute. But first, see how price responded to it yesterday. Now, I know, you see things like Adam Grimes, and he talks about these levels and pivots and how it's just random chance. And, you can draw a million lines, and when price hits it, it's going to look so convincing that that line had something to do with it. Price does not see my line. So price didn't hit my line because my line is there. It got into a zone of previous trading, right? This really big move to the downside that day that we had, it was the point of control for that day, 55, 59. And the point of control is just where the greatest amount of trading activity took place. It's where the greatest amount of volume from that day happened to be. Now, we could call that trader's remorse or just unfinished business, but when price got back to that same level, there was a reaction. Now, that level was also yesterday's ADR level. It was also the measured move. You can watch the video from yesterday. That 50 5560 level was a significant level for multiple reasons, including this VPOC line. So even if we didn't have the VPOC, we still had the measured move and we had the ADR. So we knew that this 5560 was significant for a number of reasons. And we saw that reaction in price from it. Now we have a new VPOC level down here, and it's at the cog line again. 33, 33, 32, 31, right around in there. So if we do make a move to the downside, we got a VPOC level down there, but that stacks us up. We got a number of them now, right? Actually, I thought we had more than that. Okay, we got two. Got a little discrepancy here with the TPO versus the point of control here for the volume profile. We hit a lot of volume right here. We hit more volume right there than we did in the entire night down here. Think about that for a moment. When we spiked above yesterday's high right here, we hit so much volume there that it moved the point of control up to that level. And that the entire overnight trading session from down here, that volume wasn't as great as the volume that we got right there. The implications for that is that we're not going to get above yesterday's high today. And for a short day, that might be a really great level to short against, at least from a bearish neutral perspective, like a call credit spread or, just straight up buying a put. I don't really like buying a put on a day like this, but I could get around it though. If it's a lotto, get something cheap. Here's a key piece though to the whole thing. Just saying we're not going to get above this, that doesn't mean that we're bearish. It just means we're not bullish. You can be not bullish without being bearish, right? So that's why I don't want to buy the put. Nothing is saying that we're going to go to the downside, break below and, get down to like 55.50 or 55.40. There's nothing here that says bearish. It just says not bullish. If you buy a put, you need price to move. If you don't move, you're not going to make any money on that put. But if you sell a call spread, you don't need price to do anything more than stay underneath this point of control. Now, could we get above it? Yeah, absolutely. It's low volume trading, so it wouldn't take much to get above this level and just keep on keeping on to the upside. Remember, I've been wrong before. Yeah, it happens at least once a day. So what I'm doing here is looking for some measurements. This was a very tight IB, initial balance and overnight range. We can measure this. Let's use this. We can measure this range and get our projections from it. We could also just measure the entire zone and get our projections that way as well. So we've already hit the measured move of 200. If we were looking for reciprocation, then we would run this in the other direction too. There's our plus and minus. It seems like we came up a little short though. You know, if we were to measure all of yesterday and project the 123 and the 111 to the upside, this little escape from yesterday, it wouldn't even get into a 111. So it still seems like we're not done yet. Like we got some unfinished business up here. Just keep your eye on this point of control. It's 55.70. That's going to be your significant resistance. If we can get through that, and then we can get through our own Globex high, we could expand to the upside. And for that expansion, I would just use targets from our own Globex high and low, starting with a 1, 2, 3, 6, and then the half back or a 50% measured move. My mouse went all goofy. So 75 and then 78 half. I don't know. I just checked Spot Gamma's website and it's still no change. No AM edition, and the market overview is still yesterday's. Maybe they don't do half days. All right, Bitcoin is down. It says the 10-year is down, but this is Thinkorswim, and I keep pointing out how Thinkorswim's got an issue with showing the 10-year. So we'll just come over here and look at the 10-year futures. And yep, it's down or sideways, still inside yesterday's range. Nat gas, that's not a surprise. And really, that's it for the things that are down. For the things that are up, what's up? Got the China ADRs through the K-Web constituents, gold miners, semis, uranium, the Mag 7, emerging markets, which makes sense because we got China up, and China is the biggest weighted name and group in the emerging markets. Solar, it's not up enough, but it's working on it. That makes sense because China's up. Well, it's not a really good lineup. You know, we got China ADRs and gold. Woohoo. And some uranium. So if we can flesh out this triple X semis, maybe some Mag 7 names. Now we've been looking for that rising tide from the Mag 7 names to kind of lift up the other names, and we continue to not see that. The market did a really good disconnect when NVIDIA had that downturn week, and the market's just completely disconnected itself from that whole NVIDIA Mag 7 move. We continue to see Bitcoin and Bitcoin proxies bleed out. So really, that's not a change of pace. Got silver on the move. Just be careful. It's coming right back up into this overhead trend line. At 28 is going to be a significant level of resistance. It was before. So we'll just unwind it back to this really big day right there. All right, when it had that massive sell-off, that's now still the candle of control. Everything resides inside of that one candle. We tried to get above the half back of that candle, and it failed miserably. It's trying again. So if it can get through there, then we still got to get above the high of that candle. If you want to, you could expand this all the way down and do something like this. Maybe add the halfback or the 50% measured move. Kind of like it the other way that I had it, but this would be appropriate too, even doing it from this side. So it is a breakout. I can't argue against that. It's a halfback breakout too, being stuck underneath this level 27.11, but significant levels of resistance here. Let's see if it can get through. I'd be surprised if we can get to 28.50, but that would be my max on this. It's a short play, 75 cents, but it's cheap enough that you can get a lot of it. These China ADRs, it's been a beat down, and the target was this line. It's year-to-date anchored VWAP. You can see the target line, the reason for it. We didn't quite get there. Getting a little bit of a relief bounce today, more like a dead cat bounce kind of thing. I don't see this bullish. I just see this trying to revert back to the mean a little bit. So it's not bad for a chase, but I wouldn't trust JD, PDD, Baba, Baidu, Neo, XPEV, none of those, right? It's China ADRs. They're just getting a little bit of a juice bump. Gold miners still building this massive head and shoulders on the daily. And I get it. That's the worst signal, all right? This big, massive 3-month long head and shoulders that is building out. But it is building out. Right now, though, we've just got this cluster. All this trash, and that's what we're stuck inside of. So sure, it's up. See where it closed, and we gapped up this morning. We're outside yesterday's price. Yay. But we're still stuck in the range of the week, all that trash. And even if we get through the range of the week, we've got all this selling up here at 43.50. And that's not looking to change anytime soon. And then we say also it's the left shoulder on, or the right shoulder on the head and shoulders pattern right here. Left shoulder head, right shoulder. The measured move on this is what? Somewhere around like 34 on the neckline break, and the measured move between 36 and 34. So still not bullish on the gold or gold miners. Same thing with gold. Gap up this morning outside of yesterday's range. We're still in the week's range, and we still have all this trash overhead. Measure this candle of concern, plot the halfback on it. That seems to be the level of resistance. 34.76. Get through that, you can get 36. Interestingly enough, uranium looks a lot like those. The problem with this is it does look like a cup, and we were looking for the handle at this point. So they're big sloppy candles, big wicks on each side. Not a lot of help here. We're right back to the year-to-date VWAP. So that's not good. We are underneath January's levels, I think. Where do we start the year? Right here. We're not there yet. Close. We'll see how it goes when we get a bit of a reset. There's where we opened. I wouldn't be surprised if we go ahead and come on back down to the start of the year. Well, out of all of them, gold looks like it made the biggest move between gold, silver, gold miners. $218-ish. We've seen what happened the last time we got out of this range. It was a significant beatdown. A one-day wonder popped up, slammed right back down again. So we'll see. We're getting a little bit of juice in gold. 218 seems to be the resistance in flavor. And pot stocks. A little bit of love this morning on those two, but there's nothing here, right? Until we get legislation changes, this is just a sinkhole for money. The thing is, and I didn't catch all the numbers because I would have already repeated it if I had all the numbers, but I'll give you the place to look. The inflows on marijuana companies, marijuana stocks, pot stocks, the inflows continue to come in. And Bloomberg has the numbers. If you can, had to be an article in the last 3 days, 4 days. The amount of money that it continues to flow into this space is impressive because we're all waiting on that change in legislation, right? And then that's going to really change these names. And so, of course, a lot of the big firms continue to just add in to the names that are in these ETFs or just the ETFs themselves. There's MJ and MSOS. That's some good color. Thank you for that. IRS ruled that pot stocks cannot take normal bust deductions yesterday. That's good. That kind of accounts for that fallout, huh? But yet it's still stabilized. It's just a beat down that has not ended yet, right? Here's year to date. It's where we started. After all this running around, we are right back to where we started underneath the anchored VWAP. We could even get reciprocation from here, right? If we went this high one way, we could go that low the other way. I don't think we're going to see that. I think just getting back to year to date is a good start. I'm in this. I've been in it for quite a while. My average share price continues to fall because I just keep selling options on it. I'm in it for the long term. I'm not looking for a quick turnaround. I don't think there's going to be a quick turnaround, but I'm in it. IRS ruled that pot stocks cannot take the normal business deductions. So all those pot companies just got their one more tool taken away from them then. See what we got in the China ADRs. The BABA, for an example, had a really nice run started yesterday, and it's trying to go today. But this is not some, comeback kid that's going to, rally up and take out the highs kind of thing. You'll be lucky if it even comes back up into this zone where all these sellers are at up here, right? So right back into the year-to-date VWAP, this blue line, 75.25. If you're lucky, it continues to run that far, right? Baidu, same thing, gap up like we're going to get some sort of continuation. But look at the move here. This has been a very beautiful move to the downside, consistent and persistent. Of course, it's going to come up a little bit. Price is not supposed to move in a straight line. It's supposed to pull back. And that's what we're seeing here today. It's just a pullback. I wouldn't look at this as some sort of, mean reversion play where you're going to run it all the way back up to this blue line yet. Having said that, if I was going to go for a cheap play, some lotto that doesn't hold a lot of threat to me, there's nothing wrong with taking a lotto, right? It's what scratch lottery tickets are all about. If you can target $100 or even the 105 with a very cheap options play, then why not, right? And it's just by the end of the year, say January options, way up at this 100 to 105 area. And that's what I would be looking at in the options chain. It's using something like a 100, 105 call spread. And if you can buy something like that crazy cheap, why not? The thing is, I don't know that you'll get it too crazy cheap. And it's not a lottery ticket if you drop a couple $100 on it, right? You don't get a scratch lotto at the gas station for a couple hundred. And that's because its projected win rate is so low. JD, it reached the target. We talked about this a while back. That was the target that we had given, was this blue line. We're there, getting a little bit of a mean reversion bounce. It's unlikely to provide much at this point. And now that we've got here, I think that puts 24 on the table. That would give us a really good double bottom bear trap bounce setup. We'll see if we can get it. They all kind of look the same, huh? JD, PDD, XPEV. Just beat down trash. Silver is giving it a go, though. If we can get precious metals moving, get some pot stocks. This isn't the kind of rally that you want, though. You don't want the S&P and the NASDAQ trying to rally off of pot stocks and China ADRs. Precious metals. We need the Mag 7 to come in, get some semiconductors up there, and we're just not. We don't have that yet. So Meta tried to gap up this morning. It's already stalling. Amazon, same thing. Tesla started out good, ripping really this morning from this bear pennant, bull pennant, but already starting to stall out there too. That was our measured move, was 20, 30, and 13 cents, which is what we got to yesterday. There was our measured move. Excuse me, I misspoke. That's not our measured move. That's our halfback. So it made it back to the halfback yesterday and broke above it. Getting above that halfback is pretty bullish, all things considered, but that's an old measurement. It's measuring from this pivot to that pivot because that's what we were measuring at the time. And then we had all of this breakdown. So it needs updated. Looks like this gap closed 248.36. It's a gap from right at the start of the year. Nope, it got closed. It's off the table. There is no gap there now. And we've already exceeded the reciprocation level. So if we were to measure from VWAP to the lowest point and project that up, we've already made that move too. And we made that measured move yesterday as well. See how it lines up 30.33. So we took it. We need to keep it. If we break back below 230, then we should have a nice short at least back to 215. I took Tesla short yesterday afternoon, so we'll see how that plays out. I just have a generic call credit spread, nothing fancy. Apple didn't have a pop up this morning like all the other Mag 7 did. It's just been kind of languishing sideways. Google popped with its peers. They seem a little tired though. If we don't get those and we have instead pot stocks and precious metals in China, I don't see the S&P and the NASDAQ being able to continue today. That's exactly what I expect to see right there. Okay, so we just got VWAP reciprocation. What we had on the upside, we now have on the downside, and it's right into an old level. Let that play out, even measure that if you want to, and then start projecting those levels to the downside. That would give you your targets lower. And the goal right now is back to the central pivot. 55.50 first, get past 55.50, and we can start messing with yesterday's halfback and RTH open, Globex open, all of those levels, one at a time, all the way back down. Just remember, we're not expected to go anywhere, and that means bullish and bearish. We're expected to hold the range. Like I started today talking about the ADR level. I really think we're just going to stay in the ADR. If you take yesterday's high as our line in the sand, then the range for the day just becomes this, from the red line down here up to our own high of the day. That, I think this is what we're going to do, is just stay in this range until the half day is done and we go into the close and come back Friday. Everybody be careful, be safe. Keep all your fingers. I'll see y'all Friday.